it was a bit of a mess. Post-pivot, we had found our lane in the market, and we were starting to see growth. We were starting to see great metrics. We had acquisition offers in the back. We don't tell enough of our own stories of our success. A lot of times we get kind of bogged down in the stuff that we can't necessarily control to avoid analysis paralysis. We can get so caught up in making a decision that it kind of restricts how you're able to progress. And momentum is way better. Even in things that on the outside look like they're very, very difficult decisions, they can become two-way door decisions if you think creatively. It's up to all of us who are in places of privilege now to go back and kind of help pull others into that space.
Welcome to another weekly episode of Strategy and Tragedy, the show that spotlights the highs and lows of starting, scaling, and even exiting your own business. First off, I want to take a second to thank you so much for tuning into my show. I know that there are so many other podcasts out there that you can choose from, so it genuinely means the world to me that you're listening in right now. I hope to continue to deliver fascinating interviews with great entrepreneurs packed full of practical tips and inspirational accounts of how they've built their businesses to help you in your own entrepreneurial journey. If you haven't already, it costs nothing and takes a quick second for you to hit that subscribe button. And if this is your first time tuning in, then as a very quick intro to your host, I'm Stephanie Melodia, and for about 6 years, I ran an award-winning marketing agency for startups and scale-ups. Over that time, we worked with over 100 founders and their scaling teams, which of course put me in a privileged position of hearing everyone's stories, including their trials and tribulations. Little did they know that they were all experiencing the same challenges. As I was the one at the epicenter of all the conversations, I was obviously privy to certain themes and patterns, which is one of the main reasons that I started the show. Strategy and Tragedy, as the name suggests, is all about sharing both the highs and lows of business, because entrepreneurship, even for the most level-headed among us, is a roller coaster. Entrepreneurship, I honestly believe, has also been overly glamorized in recent years. Yes, it can definitely be very rewarding and you get to make an impact on the world whilst making money and growing a team, but that's not to say without its challenges. But you already knew that. So it's with this backdrop that I started the show to share with you the important lessons learned and practical, actionable tips from entrepreneurs, investors, and subject matter experts telling it how it is to help you in your business journey too. To hear more about the philosophy behind Strategy and Tragedy, I strongly recommend you bookmark episode 0, which says start here, to listen to straight after this episode. It's double speed. That means it's only 3 minutes of context for you. With all that being said, I cannot wait to dive into my next interview with Farhan Lalji, founder and general partner of LTV Capital, a platform for emerging managers and investors in world-changing ventures. He's also a teaching fellow at London Business School and entrepreneur in residence at King's College. Farhan, welcome to the show.
Thank you for having me.
I feel like that's the most I've spoken on this show. So it's rare for my listeners to hear so much of my voice, but that'll be it as I put the mic over to you. So tell us about LTV Capital, first of all. Let's start there.
Sure. So LTV Capital is a fund of funds primarily. So we will be investing in managers building their new venture capital firms. Alongside that, we saw that there was a gap in the market for really supporting new venture capital firms. I've come from, background that's entrepreneurial and directly investing, and kind of saw that actually there was a need for people who kind of like understood the trials and tribulations of building a new venture firm. Fund managers can be entrepreneurs and usually are entrepreneurial in some way, shape, or form. So helping them kind of get up and running is our ethos, and that's what we're going to build at LTV Capital.
You're on this show for many, many reasons. One of them is your awesome accent, which I love. Do you hail from Canada originally?
That's correct. Yeah, well done for sussing that out without me saying too many outs and abouts and A's, which after 20 plus years in the UK, I still haven't managed to lose.
What brought you over to the UK initially?
It's a little bit of a funny story. I came to the UK over 20 years ago on a 2-week holiday and ended up missing my flight back to Toronto.
You're still waiting.
Yeah, I'd like to say on purpose, but it wasn't. Basically came to the UK on a 2-week vacation, had some friends here, had some family here, found that there was a lot of opportunity. So had some intention of coming back, but then missed my flight totally by accident, and then decided to stick around for a little bit longer. Had finished uni, done my undergraduate degree, Didn't have a job to go back to in Canada, was thinking about going back and doing my master's at that time, and just found that there was so much more opportunity at the time here in the UK than there was in North America for me. So hence sticking around.
Interesting. I would love to get your view on the opportunity in the UK now. You know, not coming from here originally, and you saying that was 20 years ago. Things have obviously changed so much in that time, but I feel like now in particular, things are pretty dire. What's your take on the situation?
Dire is one way to describe it. I mean,
but in particular, sorry, just to clarify, from a bit more of that international perspective as well. So
yeah, I mean, I think the UK, has a culture of always punching above its weight, and at the same time not thinking it's doing enough, and that's not actually a bad place to be, right? When you think about it. The amount of world-class institutions, the amount of research, the amount of capital that goes into companies, the amount of service industry institutions and work that we do as a nation, I think we don't necessarily give ourselves enough credit. And it feels like a very British thing to do. It's kind of like, I don't know if we're all that. But at the same time, when you look back and you kind of compare league tables, we do quite well. When you think about the fact that companies like DeepMind started here and companies like OpenAI have opened international places or offices here in the UK, it's for valid reasons. It's because the quality of the talent here is immense. The network capability is amazing. And I found, working for a large institution a few decades back, that I could do a call in San Francisco and a call in Singapore, and my day wasn't ruined. And I don't know if there's very many places that can offer even that basic fundamental capacity to do that.
That does make sense, but I do have to say I definitely fall into that group of people who don't think that we're that great or doing enough. With that in mind, what do you think that we could be, because I do feel like we're falling behind in many ways. We're sat in Shoreditch at the moment, which is very much, it's kind of laughed off now as like the failed Silicon Roundabout, which never made it to these aspirations that the politicians had a few years ago. I guess like now with Brexit, with all this other stuff that's going on, how can we remain a competitive nation on a global scale? Because I just feel like we're flanked by two superpowers, like China in the East, the States over in the West. Like, I just feel like we're falling behind.
Yeah, I mean, it's an interesting narrative and an interesting question. I think a lot of times we get kind of bogged down in the stuff that we can't necessarily control, in terms of things like Brexit, in terms of things like, which political party is in control. But at the same time, I do think there's been a number of great things that the UK's done to incentivize innovation, to incentivize investment in innovation. I was listening to an earlier episode of yours where you had Andy kind of speaking, and he was talking about the tax breaks that the UK offers, and I have to agree, that the UK does kind of do some things really, really well. When you think about innovation, the R&D tax credits, the SEIS and EIS capacity, and then when you think about like how much we kind of like benefit from having great institutions. I mean, just in London alone, right? Forget about Cambridge and Oxford. You've got world-class institutions like Imperial and UCL. It was interesting, very randomly watching, I think it was the BAFTAs, and you had the director and producer of Oppenheimer, and they were talking about how they met at UCL. Right. And it's like those things don't get appreciated. And I was like, nobody's talking about that. I had no idea that Christopher Nolan and his wife, who's also like a world-class producer, met at UCL.
Amazing. But you're sharing it on the show now, so hopefully more people know that.
More people will realize that. Because I'm like, there's a number of great kind of like stories like that. And I think people learn from stories, but we don't tell enough of our own stories of our success.
I love that. I wonder also, as I'm listening to you, if you're better placed to have more of an appreciation for the from here originally. And it's great that you mentioned Andy Ayim as well, because that is actually one of the very few, if not the only other episode where I've asked a similar sort of question in terms of the international perspective. He worked in Silicon Valley. So well done you. I love that you did your research.
Yeah, I mean, it also took us, we left the UK for 2 years in the middle working for a Silicon Valley company, Yahoo. At the time, they moved us to Switzerland. making that transition really kind of showed us what we were missing in the UK.
Interesting. Yeah, good to know. All right, so going back to your career, so you're now founder, general partner of LTV Capital, which you describe as a fund of funds. And you mentioned that you have been on both sides of the fence before. So as an investor, as an entrepreneur, what was your previous chapter to setting up LTV Capital?
Yeah, so it actually relates to having been in Switzerland for a couple of years. I was with Yahoo post-business school. Being an expat in Switzerland allowed me to take a little bit more risk. So after my time at Yahoo, I went and tried my hand at being an entrepreneur, built a number of businesses, worked as COO for a number of companies that were growing and scaling as an operator, helped one business pivot massively, scale, probably more than the investors thought it could when I went in. And we had a reasonable exit in that venture. There was a company called Peer Index in the social media and data analytics space. After that exit, after the earnout, after doing some angel investing and working with some early stage companies, I joined Anthemis Group, who were investors in Peer Index. I was at Anthemis for 5 years, originally as an investor, directly investing in fintech opportunities. And then I spent 1 year building out kind of Anthemis's capacity to invest in funds. So did that for a year with a larger institution before deciding actually still had a couple more swings at the entrepreneurial bat. And so decided to leave. It was actually, to be fair, it was a little bit of Anthemis and a little bit of me. You know, Anthemis had decided that actually what they needed to do is focus on their fintech activities, and actually the fund of funds opportunity that I really wanted to pursue wasn't going to be core to the strategy. So I was able to walk away.
Go and do it myself anyway.
Go and do it myself.
Do what
anyway.
I like. Life's too short.
Yeah, exactly. I mean, it was bittersweet. You know, I had made a lot of investments at Anthemis. I had some social capital, you know, in terms of the founders that we had backed, as well as the LPs and GPs that I had met through my time at Anthemis Group. But at the same time, it was nice to know that a lot of our prospective LPs were supportive of us going and potentially doing it on our own. So it wasn't a too difficult a decision to decide to build LTV Capital outside of Anthemis.
Yeah, great. And you mentioned Peer Index briefly there. I want to come back to that because I know you exited as you were COO of that data analytics platform. So I wanted to ask you a bit more about that. But just holding where we're at in the story for a moment is I remember when we first met, you had some new ideas on how you were going to go about things. So as we're talking now about, you know, go off and setting up LTV, doing your own thing. I remember you sharing some thoughts that you had in particular on kind of scout networks. You know that I'm part of a scout community.
Yes.
Tell us more about that and if there's anything else that you're doing differently at LTV.
So I have to be a little bit careful just from a regulatory perspective and from like a marketing of a fund that's not really set up yet as a firm. But what I will talk a little bit about scout networks and how they're set up and our view on them. I think they're a good thing fundamentally as intentional to help both investment firms get access to deals maybe that they wouldn't look at. And I think they're good for the individuals who sign themselves up to be scouts for a lot of these other firms. Where I think it kind of gets let down is what is the actual intention of joining a scout program? And if the intention is to become an investor, then there's a lot of things that scout programs don't necessarily set you up for success if that's your aim, right? So in terms of building enough liquidity to start your own firm, that's really hard to do as a scout, right? If it is to build your track record as an investor, that can also be difficult to do as a scout because a lot of scouts get an allocation and then they're a really small ticket in a firm's first round of capital. And they're not necessarily seen as adding that much value other than the ticket, right? So how do you try to kind of balance out the ability to deploy capital in a way that's set up, structured, and allows for both the scout and the company to succeed? And I think that's a real challenge with how scout firms are set up, especially in Europe. I think Sequoia does do a good job setting up a whole firm around this, setting up a whole fund around this, but I think it's really hard to do. And I think a lot of people become scouts because they like to say they're investors, and it's really hard for them to deploy significant amounts of capital and to build their track record and to build wealth. You know, I've yet to find, at least in Europe, a scout who's made significant allocations through a scout program and has made significant returns off the back of those scout tickets.
So what are your current ideas on the alternatives?
So again, without saying too much, we do want to kind of follow Sequoia's model a little bit more, but thinking about it more as, Sequoia does it for Sequoia, right? So Sequoia does it so that they can find deals, so that they can source these activities, and then Sequoia can keep investing.
And sorry, for anyone who's not aware of the Sequoia model, can you give us a quick overview?
So the Sequoia model is they have, I can't remember the fundamentals, so I might get this wrong, but something like $100 million of which they allocate through scouts. And then they share the carry with those scouts. And that's a broad network of individuals who can make investments. And then as those investments grow and succeed, the investors will do quite well as well. So the scouts do quite well. A lot of times the scouts are also investing their own capital alongside Sequoia's capital. So they might already have some wealth in order to be able to invest. That's not always the case, but it can be the case. And so you get people, who kind of will operate as a Sequoia scout and invest in Uber.
So sorry if I'm getting a bit confused, but it sounds a bit more like an angel program. Do they get to allocate a certain amount of that 100 million?
Yeah. So they'll get to allocate that capital. Right. So that capital is not, Sequoia will manage it, but that capital goes through their scout program in that front. And I might be getting the fundamentals mixed up a little bit, but that's kind of the intention. And if you think about that and you compare it to a number of the other kind of scout programs that exist, in those programs, you get told you'll get an allocation of capital up to that amount. You can bring the deals in. Maybe you get a percentage of a shared carry pool rather than kind of like a real incentive around significant amount of carry on the investments you make. And I think that's what's kind of missing, is allowing for scouts to deploy capital and make significant return on those investments.
Yeah, amazing. Sounds exciting.
Yeah, right. Watch this space. Watch this space.
So rewinding back to Peer Index, you were the COO at the time of exit. Any founders who have been on this show who have got an exit story, they seem to have like some real drama around what happened. Things almost fell through at the last minute or didn't turn out how they planned. Do you have any similar tales from your exit experience?
How long do we have?
Yeah, well, less than an hour 10 apparently.
So we were in an interesting position. So I joined Peer Index. Zimazar had been building away for a significant amount of time. The cap table was a little bit messy. And so as we tried to raise more capital, it got to become a real struggle on that front. So we resorted to building a crowdfunding round. So we were in the middle of this crowdfunding round. I say middle loosely because we had promoted it, and even there we had stories, right? Like this is in the early days of crowdfunding. So, around 10 years ago that we were raising a crowdfunding round, and we had committed capital. So we had investors who were ready to invest. And as we were doing that, we started to get acquisition offers. And so here we were kind of like sitting on a crowdfunding round that hadn't closed, but people who had committed capital. And then at the same time, we had acquisition offers in the back. And so it was a really difficult challenge because our crowdfunding round was supposed to close. And a lot of our investors, it's kind of like, which investor is kind of yelling at you to take their money, right? And in this case, that's what kind of was happening. And people were asking us, when are you going to close this round? Why haven't you closed this round already? And you can't disclose that you're in the middle of discussions to sell the business. And so that was happening. And we had a number of offers. It wasn't even just one. We had two competing offers. And so not only did we have to navigate, the different kind of like benefits of the different acquirers and the valuations they were giving us and the structure of those deals, but we also had to manage a number of crowd investors. And we also had to manage a runway because we were running out of money. And so we're like, can we hit payroll? Well, we could if we take the money off the crowdfunding platform or if we make the acquisition happen. But if we don't do either of those things, then there's not going to be any business to sell.
Right.
In that
I mean, it sounds like a nice problem to have. I mean, it sounds stressful. I can sense the stress from you, even just recounting those days. But
I mean, in retrospect, we went through it. We got through it. I think we chose the right option, which was selling the business to a company called Brandwatch. For equity in Brandwatch, it was a good deal for us. The investors did okay. The founders did okay. So it was like, it had been a venture that had been going on for almost 10 years on its own, right? Maybe not as much, but it had been going on for a long time. And, cap table was a mess. The company had pivoted. We were showing if we had started over and restructured the entire business, then we probably would have given it a real go and continued to kind of build. But because we had this history, because we had this cap table, because we had, it was a bit of a mess at that point from an underlying business structure perspective in terms of the investors who were around the table, not necessarily, the business itself. Because post-pivot, I feel like we had found our lane in the market and we were starting to see growth. We were starting to see great metrics from, a monthly recurring revenue perspective. And this is before people were, building SaaS businesses and talking about SaaS multiples and all of that. But we were starting to see those monthly recurring revenue numbers kind of ticking upwards in a way that was made us feel like we had a good business. But at the time, we just couldn't run the business any longer. Right. So it was a really stressful.
And where did you leave the crowdfunding investors?
We ended up not taking the capital. So
were they pissed off? Or?
A few were. But I think we couldn't really disclose why we hadn't taken it. So, a lot of them were like, what do you mean you're not taking the capital? And we couldn't tell them why we're not taking the capital.
This is just a bit strange.
It's a bit strange. You've signed terms, but you haven't closed the deal. And so navigating that, kind of communication story. And I mean, the crowdfunding platform that we use, they weren't happy either because it's their own reputation. As well that happens, right? And it was really interesting. A number of things happened. So for example, we listed on the crowdfunding platform right when a publicly traded wine company listed on the platform. So they listed literally the day after us. So we took a lot longer to get to our goal than we probably would have because capital was going to, I think it's Chapel Down, the wine company that listed. And so Chapel Down, I think that's the name, was raising all this capital and all the liquidity on the platform was going there. So our fundraise ended up taking much longer. And as the fundraise takes much longer, that's when the acquisition offers come in. So, everything could have been a little bit differently. And who knows kind of what would have happened at the end.
Sure, but we can't really waste sleep over what if or what could have happened. Yeah. But that being said, I mean, I can sense your stress kind of, even though did you say this was about 10 years ago?
Yeah, it was 2015, 2016, yeah.
Right. Oh, wow, God.
I know, it feels like yesterday, doesn't it?
But yeah. That was like
9
last year.
years ago.
Like, oh my God, we're actually in 2020. That was almost 10 years ago. That's so wild. But you mentioned about, the decision you had to make. It's, as I said, it does sound like a nice problem to have, but I do empathize with the tough decision-making process that you had to make at the time, which leads me on to, I'm fascinated in hearing about people's, if they've got any frameworks or processes or more kind of loosely guiding principles when you're faced with having to make tough decisions. So whether it's hiring or taking investment or making an acquisition, obviously those are the big things. But of course, we're faced with so many micro decisions on a daily basis that it's something that I'm also selfishly interested in. And how do you go about making decisions?
I mean, there's something to be said for trying to avoid analysis paralysis.
Yeah.
Right? So committing and moving on, right? You're never going to have all the information. I basically live by Jeff Bezos's one-way door, two-way door type thing where, if it is a one-way door, that means that you're going to go through this decision and it's going to be really, really difficult to back out of it. It's going to have a major impact. It's a really, really difficult decision. Take your time, measure twice, cut once, right? Whereas if it's a two-way door decision that you can kind of make a commitment and you can walk out of there and think, okay, I learned quickly and we'll do something else instead, then it's better to take the action and get the data around whether or not the action was the right action. And then, kind of have another cycle of making an action after you have the data. So I think going through that framework, it's okay, are you going to, kind of value the business at X or Y? That might be a one-way door decision. But at the same time, if it's a convertible note on a discount, right, then maybe, the discount and everything else, and you can structure in a way that it feels more like a two-way door. So even in things that on the outside look like they're very, very difficult, almost like cement shoes type decisions, they can become two-way door decisions if you think creatively. So I think trying to figure out, can I turn this one-way door into a two-way door? And then can I make the decision? Because speed gets underrated, right? A lot of times if you take a lot longer to make a decision, you're going to end up, setting yourself back just because you took too long to make.
Quick one. I need to tell you a bit about Patreon. If you haven't heard of it before, Patreon is the creator platform that enables people like you to support podcasters like me. I actually studied art history for all of 5 minutes, which is where the whole idea of patronage, aka financially supporting artists, comes from. Kings and queens would commission artists to create paintings to adorn their castle walls. Upper class lords and ladies celebrated their accomplishments by using their wealth to support the arts. And during the Italian Renaissance, my favourite era, the Medicis actually developed a close bond with Michelangelo, who painted the Sistine Chapel, and the Sforza family supported Da Vinci, who helped name Leonardo DiCaprio. That is a true story, by the way. Anyway, I know that you're not here for a history lesson thrown in to your business studies class, but if you're feeling like a rich Renaissance royal who wants to support your very own little Botticelli here, then Patreon is the solution for you. Simply tap the link in the show notes to select your tier of patronage to support the show. It starts from a low amount and it really means a lot to help me to continue producing these interviews that I hope you enjoy. Thank you so much for listening. Let's get back into the episode. And off the back of one of the things you just said there is, do you have any advice on kind of gaining perspective? Because I think when you are in the trenches, when you have rolled up your sleeves, especially, if you're tired and you've just, as I said, you've got so many micro decisions to make on a daily basis, having to make anything that's a bit bigger is like, oh my God. But, I was speaking to someone else who is an advisor as well, and they've got the benefit of the distance, the space to be able to pull out the founder from that down in the weeds. So do you have any advice to people who are in that sort of situation and help them sort of gain perspective on what are one-way doors, what are two-way doors?
The Chinese parable of the man and the horse, the farmer and the horse, where, he constantly says, we'll see, right? And it's like, okay, well, nothing's going to be too bad that you're not going to rebound for it. So I don't know if everybody knows that parable, but it's like, a man loses his horse and everybody's like, oh my God, that's so terrible.
Yeah.
And the farmer's like, well, we'll see. And then the horse comes back with 2 more horses and he's like, that's great. You've got 3 horses now. And he's like, yeah, well, we'll see. And the son rides one of the horses and breaks a leg. And it's like, that's so terrible. Your son's broken his leg. And it's like, oh, we'll see. And then, the military comes and they can't enlist the boy because he's got a broken leg. And it's like, oh, that's great. We'll see. And it's this idea of actually, you don't know in that moment if this is a blessing or a curse.
Yeah.
You just have to kind of keep moving, right? And a lot of times we can get so caught up in making a decision that it kind of restricts how you're able to progress. And momentum is way better, right? So can you actually create momentum? And if you're doing something that's going to stop you from building momentum, then how do you unwind that? And I think that's usually when I'm doing counsel, it's like, make the decision, move forward. And I try to give which hat I'm wearing when I'm trying to be empathetic, right? So I had a founder who I used to sit on the board of call me up recently and was like, hey, really interesting challenge. He was being offered a lot of capital, but at a flat valuation. And so I was able to kind of help him go through it and think through the macro environment, think through kind of what that capital will save him, think through kind of actually are the multiples fair in this valuation and everything else, and to help him. And I felt kind of a bit blessed, I guess, that he knew, even though I wasn't on his board anymore, that they could give me a call. I would walk through the circumstances with them. I would help. I didn't tell him anything new, right? I was just there to reflect and help him make the decision and move on.
But sometimes you need someone else to go through that process.
That's exactly it. And sometimes you just need to be a mirror, right? Sometimes you just need to be, okay, I hear what you're saying. Let me feed this back to you just to help them. Because sometimes, founders, operators, people will have that kind of narrative going on in their head. And all they need is somebody to play it back for them so they can hear it rather than say it and then say, okay, I can make a decision.
Yeah, totally. So on that note, I read that you are or were on the board of 6 companies. Is that correct?
Yes. Yeah, I was at the peak, it was 8.
Oh, Jesus.
Yeah, I was on the board of 8.
There's only 7 days in the week, Farhan. Wow.
I know. It was a lot.
That sounds like a lot. And was that alongside the teaching and everything else as well?
Yeah, I wasn't doing as much teaching, but we had fully deployed this vehicle that we ran through Anthemis. Its intention was to kind of build companies, go from 0 to 1. So we had kind of made that significant amount of capital invested into super early stage founders. And so I was taking board seats and I think 8 of those businesses.
Wow. All right. Well, I wanted to ask you about energy management anyway, so we'll come on to that. But just sticking with these 8 board positions that you had at one point, from your perspective of being sat across all these different boards and having had such an expansive career in these different roles as well, what's your perspective on the most common challenges? Are there anything, like 1 or 2 things that have come up kind of time and time again for you?
Well, the interesting thing about like board positions and working with companies is that a lot of times you're not spending the most amount of time with the company that's going to generate the most return. So as a board member, you end up, and this is kind of partially the reason why I wanted to move out of direct investing, is I was finding that the companies that were requiring most of my time tended to be the ones where I wasn't sure if they were going to generate return, right? The best performing companies, at least in my portfolio and from kind of like talking to other investors, seems to be the case as well. A lot of the best performing companies take your capital, call you up when they need help, like this founder did about, kind of this equity round. And then they go off and they make decisions themselves. They kind of carry on. They keep building their business. They make the hires, they make the fires in some cases. They move, they build product, they grow. They start thinking about their next round of capital. And you're watching on this journey as they kind of make these decisions. And sometimes you're coaching, sometimes you're supporting, but they don't end up taking that much of your time and attention. The companies where they're really struggling, whether it's to make decisions, whether it's to make hires, whether it's to think about pricing, all of these kind of different variables that companies really struggle with, a lot of times the ones that soak up the most energy from the boards don't necessarily generate the most return.
Is that a bit of a self-fulfilling prophecy there? The fact that or chicken and egg here, because like they need you the most, but is that also because they're not as resilient or determined as the others?
It's a variety of different reasons. So sometimes it'll be that because a co-founder's left early, right? Sometimes it might be that a competitor has come out of nowhere, right? Sometimes it's that a large business has come in and is offering a similar product. There's so many different variables. It's not necessarily always the founder, right? So you can make an investment, especially a pre-seed, where you're validating the team, right? You're saying, this is a great team. They might never get to product market fit, but founder market fit, I believe it, right? I believe this founder can crack this market. And then they struggle for whatever reason. And it might be their own, but a lot of times it's also circumstances that are out of their control as well. And so I wouldn't necessarily say it's a reflection on the founder. I just think sometimes there's tailwinds, sometimes there's headwinds, right? And for certain founders, facing those headwinds becomes more of a challenge, right? And they might be too big to understand this. I mean, the number of serial successful entrepreneurs whose first businesses were absolute flops, there's so many of them, right? Because they realize that actually I've learned a lot from this. They're not necessarily a better decision maker or a better entrepreneur. They've learned. And so for that reason, maybe they've become better. But as individuals, as humans, we're all kind of learning, right? So I think in that piece, what I was finding on sitting on these 8 boards or 6 boards or whatever it was that I probably had about 3 founders who were just off to the races, and I was kind of like dipping in and dipping out. And I had a bunch of others that really, really struggled, right? And they struggled for reasons sometimes that were in their control and sometimes that were out. But I would say, hand on heart, out of those, 8 teams that I backed, I think maybe 1 out of the 8, I would struggle to back again. So I feel like as individuals, they're good people. And I think that's what you're looking for at that early stage.
Yeah, fantastic. And on your note about the serial entrepreneur success, you bring to mind this chart that I saw recently, which showed kind of a bar graph of a steadily increasing rate of success with every new venture. Yeah. And it was literally like, in your second business, you're going to have 27% more chance of success. In your third business, it's 38%, and just steadily increases, and it goes all the way up to 10. And if you're on your 10th business, which I don't know well, who's got the balls for that. But
even on that point, right? A lot of times we think that founders who are in their first business are succeeding, right? We don't kind of look back at their entrepreneurial journey, maybe further enough back. So there are entrepreneurs who started lemonade stands, right? There's founders who, the Zappos founder was selling pizza in university, right? There's certain things that they can do that will make them learn the fundamentals before they start that business that's going to take off. So I genuinely believe that serial entrepreneurs, that success does grow, but sometimes we haven't measured the right things.
What comes to mind for me here as well is privilege in entrepreneurship. I'd love to get your thoughts on this, from an underrepresented background and all of the experience that you've had. You've observed, so much across your expansive career. Going at it even just once.
It's hard.
It's like, just in terms of practically the finances that you need and the position you need to be in to go. And, even besides that, having the self-confidence, the belief to think that you can go and do it. I think there's so much privilege that's wrapped up into all of that, let alone then trying to go at it again and again.
Yeah. I've got an idea for a book that I'm kind of like kicking around.
Okay, early plug
around luck. And this idea that, because I think privilege comes with such a loaded kind of like feeling for a lot of people, right? And, a lot of times, whether it's the family you were born into or whether it was the circumstances, because, you could have been born into the middle of nowhere in the UK or a cosmopolitan metropolitan area. You could be born into a community that's right around the corner from a university or a campus of a large tech company that's giving stuff to the area, right? So there's so many things that we are not in control of, right? And this is the thing around kind of when it comes to privilege. Like when I think about myself, I was super fortunate in that I went to London Business School. When I went to London Business School, I got a job at Yahoo, which, was an okay job, but they moved us to Switzerland to do this, rebuilding of the European headquarters. And if I hadn't done that, I wouldn't have had the capital to start my first business, right? I wouldn't have been able to bootstrap for as long as we bootstrapped. I wouldn't have been able to kind of build my network for angel investing in that business. So there's a lot of times where everybody has access to something that might unlock something else in the future, right? So whether it's like in this day and age, there are so many venture firms, so many opportunities that are targeting ethnic minority founders or female founders or whatever else on that front. Like STEM and the push for more women and more people of color to go into STEM fields, right? We're living in a time where I think there is more opportunity to go into these spaces depending on what your background was. And I think it's up to all of us who are in places of privilege now to go back and kind of help pull others into that space. And I hope we can kind of do that. But I do think I didn't grow into a family of wealth where, kind of I can take more risk than others did. I had to be quite calculated with the amount of risk I took on. And I learned, right? There was probably some times where I took on way too much risk and it impacted our family, it impacted everybody around me and all of that kind of stuff. And you learn from that, right? There's others who have kind of more capacity to take on more risk as well. So I think there's a spectrum of kind of like luck or privilege for most people, and it's finding out, okay, well, what can I use to my advantage?
Farhan, that's such a lovely and thoughtful answer too. You're quite right, a bit of a loaded question there.
Yeah.
Have you got a working title for the book?
Yeah, I'm toying with the idea of manufacturing luck.
Yeah, I like that.
Kind of like unlocking luck, manufacturing. I'm kind of toying with
that. Yeah, I love that. Yeah. Well, I'll definitely sign up to the pre-order list because I'm sure it'll be amazing. I mean, knowing you, but also this particular topic is just so interesting. I could do the whole podcast on that. I totally loved it. I'm just reflecting on what you were just saying there, and I think I genuinely, I am grateful, like if not on a daily basis, then like once every few days, that my first language is English.
Yeah. Like
the amount of privileges, as you say, a bit of a loaded sort of term, but I have a fake posh accent as well. Like right. I definitely, my background is like gangster, like literally I'm half Sicilian. My mum is from Southeast London. Like I definitely have pulled myself up by my bootstraps, but I am aware of the different things, along the way. And I get what you're saying as well with what you can choose to use to your advantage. And I do think there's actually to plug another episode, I talked about this ages ago with Bobby, I struggle to pronounce his surname, Idogo, Bobby Idogo, I think. We talked about that a little bit as well, because he really opened my eyes to, you can choose what narrative you want to kind of hold in your mind, and you can sort of choose, do you want that to be kind of working against you or for you, depending on the situation?
Yeah, it's interesting. There's so we're now investing, or at least we're hoping to build a fund that will invest in emerging managers, and we've met well over 700 managers in the last 2 years. Wow. And there's, a firm for almost every different thesis, right? Whether it's backing female founders, backing expat founders, backing, kind of fun entrepreneurs who are coming from emerging markets. All of these things are coming up at this point in time, right? And so I do think like now is a good time because you can find your tribe. Right. I was fortunate that, God, I'm going to be dating myself here, but like IRC and ICQ chat predating, kind of MSN Messenger and all of these things, you were able to build community that way. And I think now it's getting easier to find your communities. But the other thing is like how we justify, how we classify, how we think of successful entrepreneurs. I mean, can you find a model that's like yourself and kind of look at that? And I think you can now. Like I've seen a fund where the thesis is backing founders who've gone through a really hard life, right? In terms of losing a parent early, in terms of, kind of struggling to find their passion in life and whatever else. And then now that they've come into their lane, let's back those founders.
Yeah.
Right. So can you, and I think you can in the same way find, somebody like Evan Spiegel from Snapchat who had a very cushy home life, right? So every founder, regardless of their background today, in today's age, can go off and almost find an archetype of somebody who's built success coming from very similar circumstances to themselves, right? You just have to look hard enough, right? And then see, okay, what did they do? Because I guarantee you it'll be easier for you than it was for that person, right? So that first person to actually go from, a small village in East Africa and move to Canada makes it easier for the next person to do that, right? And that's kind of my personal story with my family, right? My family moved from small villages in East Africa to Canada, and now my life is so much easier than it was for my parents kind of making that journey. But in the same way, somebody who wants to do that today, it's so much easier because the internet access, finding archetypes, you can do a lot more today than you could 20, 30, 40 years ago.
But then I guess, I do believe, I'm totally with you on what you're saying there, but I guess a bit of devil's advocate is because you have so much more access and the internet, it's becoming a noisier space, so potentially harder to find your own lane and stand out from the crowd.
Yeah.
Not to bring it down, because I love what you were saying.
I don't know if I totally agree. I mean, I think it's like, easier to kind of learn, right? And pick up new skills. Like, I remember watching The Matrix and being amazed that Keanu Reeves could kind of plug in and learn Kung Fu, right? And I think it's easier now to learn anything and pick up a new skill than it was even that recently as when that movie came out.
I think if you have got the intentionality and the mindset to do that, because there is so much like crap that sucks us in on the internet as well. Like it's so easy to doom scroll and waste so many hours. So it's the yin and yang as always. All right, super interesting. I said earlier that I wanted to ask you about energy management, especially having so many different roles, and you're a dad of two, which was something I wanted to fact check before you came on the show, because to date, I haven't asked a single woman how she manages with her kids. So you're going to be my first man who I think needs to be asked this question is, how do you kind of manage with a family, a dad of two, and your various roles?
So when I went to business school, this is pre-getting married, actually just when we got married, I used to talk about juggling and the fact that I'm not a great juggler, right? And at the time I could only barely juggle 2 balls. And so if you give me 3 balls, I'm always going to drop 1, right? So at that point I was doing my MBA, I was working, and I was trying to kind of have social relationships, right? My wife, friends, all of that. And I was like, I'm constantly dropping a ball. There's some things, school, I'm not going to be able to do as much. There's constantly some work stuff I'm not going to do as well. And then there's constantly social stuff that I'm going to drop. I feel like that stays true, but you get to become a better juggler as you age. And I would be totally disingenuous and I would be dishonest if I didn't say that my wife does do a lot of the heavy lifting around kind of the basic needs of our children, right? So whether it's calendaring, whether it's being there for school, all these kind of things. There was a time where, she was working 4 out of 5 days and I was trying to build businesses where I did probably a little bit more of that share. But the way I think about it is in a relationship, we're looking at it as one giant pie chart, right? And you have to give as much weight to managing the family as we are to managing the finances and stuff. And you try to kind of like support each other. So, there's definitely, I could always do more, right, on that front. And you try to do as much as you can on that front, but you're going to drop some of these balls. And there's times with work that I'm dropping balls because actually I have to prioritize my kids in certain points. Yeah. And when you sign on to have a little bit, I wouldn't say a portfolio career, but when you have a number of side hustles, as I do with London Business School, or, now I've been asked to be a non-exec director on a couple of companies alongside the building of LTV. So there's going to be stuff that I'm going to drop, or there's going to be stuff that I'm not going to be able to do as well as I possibly can. I'm probably not the best dad that I can be because I'm also trying to build a business. I'm also doing a lot of this other stuff. But can I be the best that I can be with the circumstances around? And I try. Everybody makes mistakes. Everybody has regrets. I've got more than my fair share. But it's about kind of like saying, okay, can I be better? Like, what can I learn? How can I be better on that front? And I think, as the kids get older, the amount of physical energy it takes to be a good dad goes down, and the amount of emotional, intellectual intention that it takes goes up. But that means then you have some physical capacity to do the other stuff.
Yeah, makes sense. Thank you for such an open and sincere answer, Farhan. I appreciate that. Just on a practical sort of note, I guess, what does a typical day look like for you? And I'm also just really into kind of energy management versus time management as well, going through burnout myself a couple of times. So what does a typical day look like for you, and how do you manage your energy throughout?
I wouldn't say there's a typical day, but I will say there's like a typical week, right? So if you expand out, a typical week would be, I'm doing the family stuff. I will do at least 1, hopefully 2 drop-offs of my son to school. I'll do some mornings. I'll be around for breakfast at least a couple of days a week. I try to be home before the kids go to bed every night, or at least 4 out of the 5 nights, maybe 3 out of the 5 nights. I'm home for dinner, right? So we're eating together at least 3 out of the 5 nights. There's a couple of nights where either there's events or meetings or whatever else that I'll try to get there for bedtime. Maybe 1 or 2 where I don't make bedtime at all. But I see them every day, right, on that front. So that's the first bucket, just kind of leading on from the family conversation. And then, kind of the work stuff, I try to kind of like keep time. So I try not to do meetings before 9:30, and I'll try to get some gym time in the morning. I just feel like I'm more energized for the day if I've had a little bit of physical activity after doing the drop off or even before that. And then it's a lot of meetings, right? So you're constantly meeting managers, constantly meeting limited partners, prospects. My co-founder and I are connecting. There's a lot of back office stuff that we're having to lift right now as well. And then there's, preparing for London Business School. There's a lot more teaching that I'm doing this year. So they'll be, kind of engaging with people around potential speakers and whatnot for the classes I teach, making sure I have all my slides, all of that ready. And it's really, I would say, different 2-week sprints that I'm going through on that front, depending on what time of year it is and where we are in the business. And
just mentioning all the meetings and stuff that you have to do, would you say you're naturally an extrovert or introvert?
I would say that I am probably an introvert masking as an extrovert.
I can relate.
So, constantly, what I mean by that is that, you could do the Myers-Briggs or any of those kind of things, and it'll probably put me in as an extrovert, right? I do get energy from people, but I do feel like I also need my time after I've had a lot of interactions to just decompress and spend that time by myself on that front as well. So yeah, it's a bit of a mix.
All right, makes sense. Very sadly, we're coming to the end. I can never believe this with these episodes. The time always flies. We have a closing question as tradition on this show, which you may have heard as you've already listened to a few other episodes. Strategy and tragedy, as its name suggests. One of the things is that we often learn the best lessons from the biggest mistakes or tragedy, so to speak. You've held so many different roles. You've sat on the board of companies. You're an investor. You've fund of fund, all the rest of it. Has there been a tragedy that we haven't already touched on that's taught you a big lesson?
I'd say it kind of groups together, right? And I think tragedy feels like such a big word, right? And
it's just because it rhymes with strategy.
It rhymes with strategy. But at the same time, I think it's biblical around this too shall pass.
Yeah.
Right? And so not letting yourself get too down. And I think now in retrospect, there were times where I was super low, right? Like my first business before I went to Peer Index, went into administration. There were angels who were backing me who lost their money in that deal. There was a lot of hurt that first venture caused for a lot of people, including myself, including my family. And so, being able to rebound slowly and build back has been nice, but it comes with a little bit of PTSD, right, on that front. And so kind of managing that, a lot of therapy around that to kind of be able to kind of build yourself back up, right? And I think whatever it is from a low perspective, being able to get back up is the crucial thing. So I think my WhatsApp status forever has been, fall down 7 times, get back up 8.
Fantastic. All right. Well, great line to leave this on. Farhan, thank you so much for coming on. I have 50,000 more questions I would love to ask you, but we'll leave it there on that mic drop moment. Thank you so much. Really appreciate it.
Thank you.
And thank you so much for listening. Really appreciate you two listening into this show. Tune into next time. The episodes are weekly, and hit that subscribe button. It really helps us out. Thank you so much.